Hello students, welcome to Dr. Ashok Mahadik's lectures, Studies Made Easy. Hello students, we will cover the chapter Foreign Currency Conversion. Points to be covered in today's lecture are meaning of foreign branch, integral foreign operations, non-integral foreign operations, rules for conversion and practical sum. Foreign branch. Students, before I tell you the meaning of foreign branch, let me tell you what is a branch. A branch is a business unit located away from the head office conducting similar operations that of head office. Let's see what is a foreign branch. A foreign branch of any company indicates a business unit of the company located in the foreign country doing similar business operations that of the main company. Foreign branch has to adhere to, means follow, the rules and regulations of that foreign country and continue its business there. The reporting formats will be governed by the rules of that country where the reports are to be published. Integral foreign operations (IFO), a business unit of the company located in a foreign country doing similar business operations and is completely dependent upon the head office for supply of goods and services and adheres to the head office policies and principles for business operations, is said to be following the integral foreign operations model. For example, a State Bank of India branch in any other country. Non-integral foreign operations, that is NIFO, a business unit of a company located in a foreign country doing similar business operations but is not completely dependent upon the head office for supply of goods and services and may or may not adhere to completely to the policies of the head office. A branch of manufacturing company located in foreign country which is purchasing raw material locally and producing goods for selling in that country is an example of non-integral foreign operations model. Students, now let us see the rules for conversion, that is the rates to be applied to different items of trial balance. Now we will study this in tabular format. On the left hand side of mine we have items appearing in the trial balance. On the right hand side I have given you the rates to be applied. First, opening stock. For this you have to apply opening exchange rate. It will be provided to you in the sum. Closing stock. For this you have to apply closing exchange rate. For fixed assets you have to apply the rate which was prevailing on the date of purchase of that fixed assets. Same thing goes with fixed liabilities, that is debentures, loans, etc. You have to apply the rate which was applicable when the liability was incurred. Current assets and current liabilities. These are monetary items and to them we will apply the closing exchange rate. Revenue items, that is items appearing in trading P&L account. To convert these transactions we have to apply average exchange rate. Depreciation, rate applicable to the relevant assets will be applied. Remittances means to transfer or send money or goods. To them we will apply the actual rate at which they are made. Head office account, it will be converted at the actual figures shown in the branch accounts in the books of head office. Now students, let us see a practical sum. ABC Limited has a branch in US. At the end of the year, as on 31st March 2011, they have provided you a trial balance. The format is very familiar. Particulars, debit dollars and credit dollars. You can see all the assets like we used to see in final account sum. Adjustments, like in any other final account sum, even in this sum you will be provided with the adjustments. Let us see the adjustments. First, goods sent by head office, rupees 1 lakh. This is the actual amount to be written against the goods sent to branch. Second, branch account in head office. This is the actual amount given to you to be written against HO account in branch. Third, closing stock as on 31st March 2011. The amount is provided to you in dollars. To this you will apply the closing exchange rate. 4. Exchange rates. Opening rate is given as 40 rupees for $1. Closing rate as 44 rupees per dollar. Average rate for the year is rupees 45, whereas the rate of exchange against dollar was rupees 20 when the fixed asset was purchased, and depreciate plant and machinery by 10% per annum. Now students, while solving the sum, the first thing you have to do, draw this new trial balance. This will have first 3 columns as it is, which was provided to you in the question. The next 4th column will be the rate of exchange to be applicable to each and every item. Then we will multiply the debit and credit items with this exchange rate to get the new amounts in new trial balance, which will be in rupees. Now the plant and machinery value is 40,000 and rate of exchange when the purchase of this plant and machinery was done was 20. So we get 8 lakh rupees as amount in rupees. Similarly, we will multiply all the items of trial balance of dollar with the exchange rate applicable to that item to get trial balance in rupees format. So after doing this, we will close trial balance which is expressed in rupees. But as you know, we have multiplied different items with different exchange rates, so definitely you will find a difference in trial balance which is expressed in rupees. So the difference will be called as exchange rate difference. The amount may appear on debit or credit side. This amount, that is exchange rate difference, will be posted in P&L account on whichever side it is having its balance. Suppose it is appearing on the debit side in new trial balance, then in P&L we will post it on the debit side. If the exchange difference is on credit side, we will record this exchange difference on the credit side of P&L. Students, once you get a trial balance in rupees, then it's a simple FYGC sum. You have to prepare a trading account, P&L account and balance sheet. Now you are aware that in trading account on debit side we have opening stock, purchase, wages and salaries. On credit side we have sales, closing stock. Now all these items are available in that new converted trial balance. The new thing which you will be recording in this trading account will be new item which you can see in this trading account is to goods sent to branch. The amount was given in the adjustments, rupees 1 lakh. Now after closing this account, you get a gross profit of rupees 3,87,800 which will be transferred to P&L account. Now P&L account is also the same. The gross profit which is transferred from trading account will appear on the credit side of P&L account by gross profit. On the debit side we will record all the office expenses, example to rent and office expenses, to depreciation plant and machinery. Well students, in the trial balance you were given plant and machinery worth rupees 8 lakhs and in adjustments we were told charged 10% depreciation. So 10% of 8 lakh rupees is 80,000, which is an expense for the company. So it is recorded on the debit side in P&L account to depreciation on plant and machinery. And to exchange difference, I had told you while we were preparing the trial balance that the difference in new trial balance will be posted to P&L account. If it is having debit balance that is appearing on the debit side of trial balance, then it will be posted to debit side of P&L account. If it had a credit balance, we would have recorded it on the credit side of P&L account. Now you can see on the credit side we have by discount received and by commission received. Once we close this account, we will get net profit. It will be transferred to balance sheet. This is balance sheet. On the liability side, you will record head office account which was given in trial balance, but the value was given in adjustments. We will add net profit which was a balancing figure in P&L account. Apart from this, all are regular items like creditors on the liability side. On the asset side we have plant and machinery, rupees 8 lakhs, from which we subtracted 10% depreciation, that is 80,000. In outer column we got 7,20,000, and rest items are very well known to you: debtors, cash and bank balance, closing stock, and the balance sheet will tally. This sum has tallied at 13,06,300. Thank you students for watching this video. Students, if you have liked today's video, click like button and don't forget to subscribe the channel. If you click the bell icon, you will get the early notification for my videos. Students, if you have any doubts or queries regarding today's video, do message us on our official Instagram account. The link is given below in the description. So students, we will meet in the next lecture. Thank you.